Hi, I'm Beth Arnold with Seashore Realty, and I'm here today with Marisa Clark, and she is with Cross Country Mortgage. We have several questions that we wanted to go over for maybe a new home buyer or possibly someone that hasn't bought a home in many years. First, I'd like to ask Marisa, how much down payment do I need to buy a home in Florida?
So the down payment that you need is going to be based on the loan program that we put you in. So there are USDA and VA loans which require 0% down. There's an FHA loan, and that's 3.5% down, and conventional can be anywhere from 3 to 5% down.
Can a gift count as my down payment?
Yes, a gift can count as your down payment, but you definitely need to talk with your lender before getting gift funds because there are certain qualifications and requirements for donors as well.
Okay. What credit score do I need to qualify for a loan?
Generally, if you're a first-time home buyer and you're looking for down payment assistance programs, you need a 640 credit score. Any other programs, mainly VA, we can go down to 620, 600, but FHA we can go down to like 550, 580.
Okay. How much can I afford? How do I know how much house I can have?
What you can afford is something that we call your debt to income ratio. You may hear us say DTI. And what that is a calculation of your gross monthly income versus how much debt you have going out each month, including your future mortgage payment. So again, certain loan programs have certain qualifications for that debt to income ratio. So we would look at all that and tell you technically on paper what you can afford. But what we do here at Cross Country Mortgage especially is ask you what payment are you comfortable with, because that's really more of an important question than what you can afford on paper.
Okay. What is the difference between a mortgage pre-qualification and a pre-approval letter?
Really, that's just one step. So a pre-qualification, we get your application information, and that's information that you give to us. Once we get that information, we get documentation from the borrower or the buyer to verify that information, and we run it through an automated underwriting system. At that point, the automated underwriting system will give us an approval or not, and if we issue a letter at that point, that's a pre-qualification letter. The next step would be sending all of that information to an actual underwriter, and they give their little stamp of approval on that. We usually do that and send it to an underwriter. It takes a little extra time, but we usually do that in cases where income is a little bit complicated or there may be something derogatory on the credit report that we just want underwriting to look at before we issue anything.
Okay, very good. Do all sellers require a pre-approval letter?
No, they don't. We will do pre-approval letters at the request of the buyer or the realtor. If the seller is really wanting an actual pre-approval letter, we will do that. It just takes a little bit more time. We like to say that our pre-qualification letters are almost a pre-approval letter because we're not just getting information from the borrower, we're actually verifying it with their documentation as well.
What is PMI and how can I avoid it?
Okay, PMI is mortgage insurance, and on a conventional loan, you can only avoid PMI if you put 20% down. If you put less than 20% down, as you pay the loan down over the years, your PMI will automatically fall off when you get under 80% loan to value. If you do an FHA loan, you are going to pay PMI until you refinance, pretty much. Okay. It doesn't matter on an FHA loan how much you put down.
Okay. What are closing costs and who pays them?
Closing costs are a combination of a lot of things. It's the lender fees, so processing and underwriting fees. It's title fees, so the title search. There's all the government recording fees, the state of Florida taxes that you have to pay, appraisal fees, credit report fees that we pass along to the borrower. Kind of in a nutshell, that's what those include. Depending on how your realtor negotiates who pays closing costs, buyers and sellers can pay closing costs. How much closing costs sellers can pay depends on loan program again.
And I wanted to make that point as well, that it can all be negotiated. It
Yes.
just needs to be clearly specified.
Correct.
Closing cost is a broad term for what could be different parts.
Yes.
So it's important, but it can be negotiated with the contract.
Yes, absolutely.
What types of mortgage loans are available?
Pretty much anything you can think of. So at Cross Country, we have USDA, VA, FHA, conventional loans, but we also have our own signature expanded list of products, which are basically portfolio products for those different situations that aren't really black and white, that somebody can and has the ability to purchase a loan. We just need to, get creative with it.
Very good. And USDA, tell us who is eligible for a USDA loan, or what homes are eligible.
So USDA, those are specific areas. So you would want to talk to a lender before you start looking at homes or considering a USDA loan, because you need to make sure where you're looking for homes is a USDA eligible area. Also, USDA loans are only for low to moderate income families. They base it on household income. So again, you also want to talk to a lender to make sure your household income is under those limits.
Very good. What documentation will lenders ask for when a buyer is applying for a loan?
Pretty much up front, we're just going to ask for 2 years W-2s or 2 years tax returns if you're self-employed, 30 days most recent pay stubs, and 2 months bank statements. That's what we need to get started as we go through the pre-approval. If there's things that look off or different and we need more verification, we'll ask for it then, but the basics are that.
Would you give a little heads up on a buyer that's considering purchasing a new vehicle or maybe a boat during this time?
We would tell them not to do that. We would tell them anything like that they want to do, they definitely need to wait until after the pre-qualification process and after they close on the loan, because what a lot of people think is once they're pre-qualified for a loan, I can go buy a car, I can get this credit card, but you can't, because before the loan closes, we do a soft pull at the end to make sure you have not gotten any more debt in your name.
That's what I was wanting you to say. How long does it take to close on a home in Florida after the loan has been approved?
So after your pre-approval and you go under contract, we ask for 30 days. We can get it done faster sometimes, but 30 days is the sweet spot.
Thank you so much for this information. I think it will be very helpful to a new buyer or a buyer that hasn't done it in quite a while. I am Beth Arnold. I'm a broker associate with Seashore Realty, and I'm very, very grateful that we had this time.
Thank you. And I'm Marisa Clark with Cross Country Mortgage.